All right, guys, welcome back. So we had almost 2 billion in liquidations the other day. Obviously, if you can see my BTC chart right now, we rejected at that key supply level I was talking about. We've now come down to the key demand. Yet to put in a bounce. Generally, after a liquidation spike like that, we see some sort of V reversal, but we're sort of just chopping and trying to form a bottom right now. Now, I have plans for upside and downside, which I'll cover later in the video. But before I do that, my name is Paradise, a price action momentum trader in the Miles High Club. Link in the description if you want to check that out. And also, please make sure to like and subscribe and also hit the notification bell. So let's jump into some charts. All right, so first up with BTC, as discussed, we were in that long from 112K. We pushed up into the 117 zone that I was talking about. It was this key weekly range low over here and also this supply level. You can see we basically spiked that. This is where we took profit on this. Do I like this move? Not so much, but really you can just look at this as sort of ranging right now. Now there's no lower high confirmed up here. We really need to see it break 107K and we'll get to why that level is important in a bit. But, until that does, it's just sort of chopping in a range here. So if we do move up, I'm kind of expecting this to be range bound. Maybe we come to this point of breakdown here around 116K before rejecting again. That would give further credence for a short down targeting those levels at 107. But until that happens, we just sort of need to play this for what it is right now. So actually what I'm looking at as we speak on BTC, there is a 4-hour divergence forming down here, and we've actually had this like 3-drive pattern. So what that looks like is like you have one low, this was a liquidation candle, we then swept that, failed to push up again, and now we've swept that for the third time. So this is basically a 3-drive. So as we see those peaks form, we actually see the inverse form in the RSI, so momentum is shifting. So at the time of recording this video, this could be where we see it push up, but I'm still kind of reserved about that, and I'll get into that in a sec. We are sort of flirting around this 112K level, this red line here, as you can see. It's the thing we've marked out in the last few videos. So I am looking for this divergence to play out, but I think right now, instead of just aping into this, you can play pretty much the format that I always play, which is my system, using the money noodle, which is an indicator I created, and you can get that in the Miles High Club, link in the description. Now you can see when we rejected off that 117K supply up here, this red line, this box, we lost the 1-hour money noodle. So each bounce into it has just been rejected and capped the whole way down. So I think right now, if you're actually looking to get into this, yeah, you can try to play these low sweeps, these SFPs, but you can actually just wait until we break above the noodle. So maybe the noodle starts to flatten out here, which would be indicative of the trend starting to go into a ranging regime. And if we do that, you're just looking for a close above it and simply for the noodle to start curling up and for price to start respecting on the way up. And you can buy any of these retests in there. So I think no rush to try to catch the Pico bottom on this because it does look quite sort of grim on higher time frames. But I think, the line in the sand is just this noodle right now. It's a very simple indicator to follow when you combine it with price action and you're simply just looking for that flip on it. Now, as discussed, what happens if we don't push up from here? So this 107K level, which I discussed earlier, is where I'm kind of looking for price to come down into and give a sweep if it can't hold this daily demand. So this trading is very simple right now. We rejected off supply. We're looking for demand to hold. If demand can't hold, we're looking for the next sort of point of interest down. And to me, that's this pocket of just weak lows down here. So a weak low is kind of just where you see this like cluster without any true sweeps. Something which would be indicative of a strong low would be something like this over here. So you can see it came down, it swept all this liquidity before pushing up. You can also see this as sort of a strong high up here, pretty much an all-time high when we made that sweep before trending down. But this right here didn't really do much. Yeah, it did kind of sweep this cluster of poor lows over here also, but I just think, potentially how this is setting up, we could just come down and flush this out. Now we need to flush this as a wick. So some sort of puke down and a recovery before pushing back up. If we start to close candles on the daily below this level, I think we trade much lower, and I'll get to where that is in a bit. But I just think right now, this is sort of my line in the sand where I'm looking to open maybe bigger swing positions. I don't really like this level right here that we're at currently for swing positions, so I'm just trading intraday. It's kind of an intraday trader's market right now. I just don't think swings are being favored. As you can see, any swing you took up here, you pretty much had to take profit on it because the whole market sort of reflected this downturn once this happened. And not much really held its ground. So why I also like this 107K level is it lines up with the weekly money noodle. Now I've discussed plenty of times on my videos why the weekly noodle is important. Now you can see since 2023, once we flipped it, every single tag into it, yes, it did chop a bit, but we never got a body close below it on the candles, always just a wick. So each time we got a wick into it, a wick to sweep out some liquidity, it pushed up. Now we front run it here around the 100K lows, 98K lows, give or take. And we actually front run it again on this 107K low sweep. So why I quite like this level right now is this sweep down here would lead into the money noodle. It's kind of my first port of call of where I want to see price bounce. Now, if it doesn't bounce there, we could be in for much lower prices. And I'll be looking at something like 98K, pretty much because it lines up with like maybe we get a sweep of this key low over here to take some liquidity and close that candle back inside the money noodle on the weekly. So that's something I'm looking for. This is kind of like worst / best case scenario. Yes, alts will go down and the whole market will pretty much give up if price goes down here. But I think, if we get a sweep there and we reclaim that, that could actually offer some of the best RR opportunities. Now, the actual reason I created this chart, apart from to show the weekly noodle, is the fact of what's just happened on the weekly close. So if we get rid of this for a sec, You can see we had this weekly sweep over here, the sweep of all-time high before pushing down. And you can see this latest close was also a bearish sweep, so a bearish SFP. So since we've got that, what you can do is actually pull your Fibonacci tool. So you can pull it from the high to the low. So generally with retracements in uptrending or downtrending markets, you kind of look for a pullback to the 0.5 or the 0.62 level because it generally offers quite a nice RR opportunity to take a position, aiming for the inverse swing back up. So I actually drag this across from here. You can see that we actually form that SFP into the 0.62 level, bang on. So this is actually where I posted in Miles High Club on the weekly close on Monday that we could be in for further downside, basically just based on this. So we got that sweep, we got it into the 0.62 level. Now what we're looking for is a push back down, potentially into that 107K low where we anchored the Fibonacci from. And henceforth why I have some credence in this level being revisited again if we can't hold the daily demand, which was just discussed. I'm also going to pull up this old chart, which I've shared a few times on my Twitter and also in here. So we were happily trading in the upper range for a bit before we came down into the lower range, deviated it and got back inside, flipped the daily noodle and came up. And you can see where that supply was actually also the equilibrium of the top range, the range EQ. So once we had a sweep of that and we rejected back down, we're now sitting at the range low of the new range and also obviously the former high of the old range. So really we want to see price hold here. We do have that daily demand, which I marked out in the previous chart. We just want to see this hold. That's all we're looking for. Now we start closing below it. It's that 107K level again, which I've been discussing. Now I think what's kind of important here is to pull up the USDT Dominance chart. So I keep talking about that 4-hour divergence forming that may give us a push up. The reason I think it could have some follow through is we are at a key resistance level on the USDT Dominance chart. So we're coming into the 3-day noodle, which is capped price at every attempt at it. Also coming to this key structural level over here at like 4.5%. Now, if we come down to a lower time frame like the daily, you can see USDT Dominance is starting to stall at that level. Even if we go down to something like the 4-hour, you can see we're in there and we actually are forming like a pretty bearish divergence on the 4-hour across RSI. If we do reject here in USDT.D, we could see that money flow back into risk assets and we could see that move up across the board, but it's too early to tell. So as I said, you don't need to rush into alts yet. Just look for those H1 trend reclaims that we discussed earlier and then try to catch some retests on those for better confirmation you're trading in line with the trend. There's nothing worse than trying to bottom tick something and it just keeps bleeding. So I just generally wait for confirmation in these times, sit on your hands for a bit, and it generally leads to like, yeah, maybe you don't catch the exact bottom, but you can actually trade in line with the trend and catch the greater move based on that without getting stopped out unnecessarily. All right, across to ETH, we have been discussing this 4K level for a hell of a long time. You can see the importance of this level dating back to March 2024, how many times we've come into it and rejected. Finally, we blasted through it, and this is the first retest of it. It's also lining up with the 3-day trend, which has been historically respected quite well. So it's time to pay attention to ETH. I just don't think it's looking that great yet. You know, if we flick down to the daily, there's nothing really happening. Yes, we did spike in that level, had a bit of a reversion bounce in lower time frames, but you can see we're just sort of slow bleeding from that. So we go down to something like the 4-hour. It's not looking that great yet, but it is potentially forming a 4-hour divergence here. So it's just the same thing as BTC. We just need to watch how it plays. You can see the H1 trend, the H1 money noodle is just cap price the whole way down. So simply all you're looking for is this to start flattening out and you start to see price get above it, and that's your trigger to take a position. But you can see if you're trying to trade ETH in this zone, you are getting absolutely chopped every which way. Maybe if you're trading super low time frames and are quite adept at it, you're having a good time. But I just think, you know, it's just sweep after sweep in here. Liquidity is being generated. We just need to see which way it pushes from here. Solana, I pulled my P&L card up for this one just because we discussed this trade so many times. I think we discussed this trade on about 5 of the past videos. So as you can see, we longed that monthly reclaim level and we took profit bang on at the weekly. So I was discussing this weekly level quite a bit, this weekly resistance level. If we go down to a lower time frame, you can pretty much see the reaction. We almost tagged it, then we front run it, then we had a sweep of it. That was an SFP. At the same time, we were forming this bearish 1-day RSI divergence. So I actually flipped short on this, which I'll cover in a bit when we go into Discord. But it was a very nice trade. It took the long exactly at the breakout level, took profit exactly at the weekly resistance, and then flipped short, taking profit. Not quite here, actually took profit a bit earlier. Basically, when we tagged the money noodle again, it's just kept trending down. But I think Solana doesn't look great here. We really want to see it hold this monthly level. I think if it doesn't hold this monthly level, then we can look for further downside. And to me, that is basically around 175. So $175, you can see this key structural level. It was a low here. It was treated as resistance. Kind of chopped through it, came back down, gave it a retest before pushing up. If we actually lose this, I think we just bracket between these two levels in here. I think that 175 will give some pretty good buys if we can get down there. Now let's flick across to the global open interest chart from Coinalyze that I've been sharing quite a bit on the past few streams. Basically, we're just looking for this pinch zone, this inflection point. So you can see around March 2024, this basically orange is alts, so others. Green is ETH and BTC is blue. But you can see every time others increased by open interest to the point where it crossed over BTC's open interest, it was pretty much marking a top where we had a big sell-off. So we had that there in March 2024. We had it again around December 2024. You can see once again we pushed up above that inflection point and then had quite a heavy sell-off. So this is the warning sign I was giving you guys on the last video to look for that flush, because we were coming into that pinch inflection zone again, and not much of a sell-off yet. So this is kind of why I'm giving you guys the heads up that there may be further downside in the horizon. I don't think it was much of an open interest flush, and potentially we are due a bigger one, but I think intraday right now, with the way BTC is trading, we might get some sort of relief bounce. I just don't know if it can be sustained. So once again, you can see we're in that inflection point. We did have a bit of a sell-off, but it's nothing compared to the ones we've had in the past. So definitely something to keep on your radar. So as I discussed earlier, it's still an intraday trader's market. There's not really any reason to be taking swings here, just basically because the moves are getting reverted. Now, as I've said that, we can play into things with narrative. So ASTER is a trade I took in the Discord the other day, and you can see the result of that here. So, massive profit on that one. Taken a lot of good trades lately in the group. So M&T was another one, really nice. Actually took a short on Solana, which I can't seem to find. There it is. That's that short I was discussing on Sol. Obviously took profit at the FEG and it's just traded lower since then. But what I'm basically saying here is there's still lots of intraday trading opportunities in the market right now, just not favoring swings so much. And I think all you have to do with this is just play into things that have narrative at the moment. So when we saw that big flush the other day, we saw ASTER held up pretty well in the green. We actually also saw AVAX, XPL, things like that hold up quite well. So that was kind of why I just decided to long M&T and long ASTER, because when we had a massive flush like that in the market and every alt looked terrible, these things were holding their ground. And that's generally a good sign that if we do get any sort of reversion bounce, these things can push up. So this is quite a simple trade. We came down into this 1 hour demand here. We swept the low. We came up and we pushed. I thought I'd missed the trade, and we actually came down and swept that again. So once we swept this key low here into demand again, this is where I took a long. And obviously just been peeling that off over the past 24 hours. And I took most of the profit, about 80% at this $2 level overnight. So I'm still holding a 20% moon bag for price discovery, and I think we can push up if the greater market does. But I think right now, like I said, it's intraday traders market, so you want to be nimble in taking profit, not hold on to anything too long. And I also think you really want to focus on the things that have narrative and dissect their price action from there. So you don't want to go longing any old thing just because you're expecting a bounce. You want to long things which are showing strength and other people are bidding. And that's basically how you keep in line with momentum in the market without getting unnecessarily stopped on things. So I think I can wrap it up there. Pretty long update today, just because I wanted to cover A and B scenarios for you guys, high time frame and low time frame. If you want to access the Money Noodle, which I've used in all of today's analysis, you can get that in the Mars High Club, link in the description. It has been a phenomenal indicator for just catching local trends and also high time frame trends for the past 2 years for me. I've used it every day in all my analysis. Please also like and subscribe and hit the notification bell. Please help me grow the channel so I can keep pumping out these videos for you. Other than that, I'll see you in a few days. Be very well. Cheers.